Today we need to talk about dividends. Yesterday we talked about the capital structure, which leads to the result, the kind of results we have. Today, as a company, now that you have made profit, remember that a lot of people would have invested into that business, into that company, who we can call the shareholders. So, what is their return on investment? Their return on investment is what we call what? Dividends. Do you understand what dividends is now? So, look at what that is. A dividend is a payment paid to shareholders after tax profit has been deducted. A company would not pay shareholders before paying the tax. The tax will be paid before the shareholders. So that means the profit after tax is where we get your dividends. Do you get it? The profit after tax is where we get the dividends. So ordinary shareholders will get return on their investment whenever the company decides, declares profit. In as much as the limited company has declared profit, that means shareholders will be entitled to dividends. But if the company declares a loss, shareholders will not get any profit, will not get any dividends because the company is running at a loss. I think we get the difference here. Note, a company will not give out all its profits as dividends, rather keep some as what reserves. So you won't give all the profits you make. As a company, the company will not give it out all to shareholders. They keep some for what reserves. Why? For the future. Because there's going to be a time the company is not going to make more, is not going to make profit or make less profit. At that time, the reserves can act or can help to pay shareholders. Is it clear? Yes. So here, the dividend is given to shareholders twice a year. So we give dividends to shareholders twice. We have the first time we're going to give to them at the earliest stage of the year. We call it interim dividend. What do I call it? Interim dividends. That's the first part you give to your shareholders. Then the final dividend, which will be decided by the directors of the company, when you have to give out and how it has to be given. Is it clear? So for the dividends, we have the preference shareholders and the ordinary shareholders. The ordinary shareholders are the owners of the company. They are basically the owners of the company. The private shareholders are individuals who have bought shares in that company. Is that clear? So for the ordinary shareholders, they don't have a fixed rate of dividends, unlike the private shareholders. The private shareholders, they have a fixed rate of dividends because they are not the owners of the business. They are investors into the business. So they don't care about what happens with the company. Do you get the point here? So private shareholders are people who have bought shares. Ordinary shareholders are those who establish the company. That's the difference between private shareholders and ordinary shareholders. Is it clear? Great. Now, we have a question. They said the company has issued 100,000 ordinary shares of $0.5, each at 31 December 28. For 2019, the company pays a dividend of 0.05 per share as interim dividends. So that means the first part of the dividend paid is going to be 0.05 on the normal shares. Capital and 8% final dividends, that's 8% is going to be paid for the final dividend. Now the second is the dividend that shareholders will receive in 2019. So what we need to know here is the value of the share, the nominal value, the total value, the interim figure, and the final figure, or which is the final dividend. So we start. Here, the company is issuing 100,000 worth of shares. Are you with me? So 100,000 worth of shares is what the number of shares. Is that clear? Then the nominal value is the value at which you are selling your shares, which is amount 0.50. Is that clear? So the total value will be the number of shares multiplied by the nominal value. Number of shares multiplied by nominal value, which is what? 100,000 multiplied by 0.5, which is what? $5,000. Is that clear? This is $5,000, right? 0.5 times this. No, 50,000. Yeah, it's 50,000, not 5,000. 50,000, right?
Yes.
Please confirm 50,000, right?
Yes.
Okay. So our total value is what? $50,000. Is it clear, please? Great. Then, interim dividend is paid. How much is the interim dividend paid? 0.05. So it will be what? For the interim dividend, it will be 0.05 multiplied by the number of shares, 100,000. Do we get it? The formula for interim dividend is what? The figure for the interim dividend, the amount of interim dividend multiplied by the number of shares. So 0.05 multiplied by 100,000. That would be 5,000. So our interim dividend is what? 5,000. Are you here?
Yes.
Is it clear, guys?
Yes.
Is it clear?
Yes.
Then we have our final dividend, which is what? 8%. 8% of the total value, which is how much? 50,000. 0.0000, which is what? $4,000. So the total figure of dividend paid is how much? So total dividend paid is what? The interim dividend plus final dividend, right? Final dividend, which is what? $5,000 plus $4,000. That's $9,000. Is it clear? So for the 100,000 shares that the company is selling, it's going to get what? 50,000 in terms of capital shares. It's going to get 50,000, and it's going to pay dividends of